Okay, this is a third question for the paper to 22 October, November 2021. Okay, on 31st July 2021, the following information was provided by KA Limited, a manufacturer of a garden. Okay, let's see what are the items one by one first. Okay. Here is a manufacturing account. The question part A, they asked to prepare the manufacturing account. So we look into the item. The format for the manufacturing account is the first is a raw material consumed. So this is the information that we have. And then after that, the direct wages. This is common that what we have, and direct expenses. But depending on the question. Okay, here raw material consumed, we have the inventory beginning of the month. So beginning of the year. So we put in opening inventory, which is the raw material amount is 5820. These three types of the raw inventory we do according to the information. So this one only take the raw material amount. Next is that purchase. Purchase got two types, raw material and finished good, but we only take the raw material amount, which is purchase of the raw material amount 34,000. And then after that, here you saw the carriage on the purchases. This is referred to the carriage inward. Okay, carriage inward is 410. This is increase the cost. And then after that, inventory. Closing inventory, which is 6030. This is to minus. So take notes in case you forget, you put in front minus. So take notes about it. So after that, see any more related to the raw material consumed. So there is no information talking about it, but here there is expenses talking about. So later on we need to take notes about it. So we calculate the amount first. So take opening plus purchases plus the carriage inward minus the closing inventory. Okay, this is the raw material consumed that we get. And then the direct wages, see here got the direct wages, and it's only one item 67200. Later on we check any additional information. Next is that any more related to the direct cost don't have. So here we put prime cost. So take note that this header must put in. This is like a keyword that must be there. So put in prime cost. After that, factory overhead. Okay, let's look into what is the item in here. Here, indirect factory or wages. Okay, this is one of it. Factory machinery at cost provision. That means we have the depreciation. Depreciation for factory machinery. Okay, next is that factory general expenses. Factory general expenses. What else that we have? We have the rate. Okay. Any more? Okay, that's all. So we put in the amounts. After that, we check any adjustment. So here is 24,000. And then this one later we check information. This one factory general overhead, change it accordingly. Overhead. Okay, here is 16400. Rate is 5300. Now we see what is the item in the additional information. On 31st July 2021, rate 5,500 were prepaid. So when they say were prepaid means that they're trying to tell you this is end of the year prepaid, we have to minus. But they say that also rate are to be apportioned to 75% factory, 25% for the office. So what we got to do, we have to show the working. So let's show the working. Okay, take the amount 5,300 minus 500. Okay, and then factory is only take 75%, so put 75%. So we have to times 75%. So the amount to calculate will be here minus 500 and then times 75%. So we get 3,006 for the factory portion. Okay, next is that on 31st July, factory general overhead 200 were accrued. So this accrued means that end of the year accrued, we have to plus. So take 16,400 plus 230. Plus 230. So this is what we get. Accrued end of the year. Take note. Accrued end of the year have to plus. Prepaid end of the year have to minus. So there is a general rule for the prepaid and the accrued amount. Factory machinery to be depreciated at 20% using reducing balance method. So reducing balance method, the formula is taking the cost. What is the cost? The cost is 47,000 minus the provision. This is a formula to get the information and then times 20%. So there is a formula to calculate the depreciation. 47,000 minus 11,000 and close the bracket times 20%. So 7,200. So now we add the subtotal. So not many items for this question, quite straightforward. Okay. And take note, manufacturing account is to plus the cost. This is all about the cost. Next is that we have to adjust the work in progress. Work in progress. So work in progress, opening inventory minus, okay, scared to forget, then you put minus sign in front of it, inventory. So take the opening inventory, work in progress 1750, and then closing inventory is in here, which is 272780. So take the opening minus the closing, and you notice this is a bracket minus sign. So you in account we didn't put negative, we put bracket. So put bracket 1030. So this is a information that we gather. So now what you got to do is we need to take this amount minus 1030. If you get positive, then you should plus. But because this is a negative, you minus. So we get this one, cost of production. Okay, so done for the manufacturing account. Okay, so now next is that, what is the information they asked to prepare? Okay. The next one, they asked to prepare the income statement trading section only. Trading section means that start from the revenue and then you less cost of sales. Okay, your cost of sales for this question is a bit more item to take notes. So our revenue straightforward 22300. Okay, and then come to the cost of sales. Cost of sales is more item to be adjusted. So first of all, opening inventory for the finished good. This one is for finished good. you want to put like this also can, or just put opening inventory also can. So the next one, cost of production. Then this question, they have the purchase of the finished good. Purchase of finished good. And at the same time, the purchase of finished good incurred the carriage on the purchases, which is $80. So carriage inwards. Okay, next is that, what else the item that we have? Closing inventory. Closing inventory for finished good. Okay, we put in the amount individually. So opening inventory, finished good is 12300. And then cost of production, which is what we gather from here. Okay. Next is that purchase of the finished good. Purchase of the finished good is 3900. And then the carriage inward for the finished good purchase is 80. Closing inventory. Closing inventory for finished good is 10,340. Okay, now we can adjust the amount and double check whether got any affecting calculation. Okay, here don't have others related to gross profit already. No, we can just calculate out the amount. Take this plus, and then minus. So we get 15. Okay, so this amount, we take this minus this. So we get 65,000. Okay, let's put in here, put remark, gross profit. So this is for the trading section. Do up to the gross profit only. Okay, let's see what else the question about. DH Limited, a customer of KA, has been declared bankrupt. The moment bankrupt in your mind, irrecoverable debt. A debt of 300 was owing to KA. This to be written off. So prepare the journal and record the irrecoverable debt. A narrative is not required. When they say narrative is not required, that means you don't need to write the reason for it. So the double entry for it, debit irrecoverable debt, and the customer name is that you put in DH Limited. So the double entry, debit irrecoverable debt 350 and credit DH Limited 350. So that is for the double entry for the irrecoverable debt. Now next, KA Limited maintain a provision for doubtful debt. Explain how maintaining a provision for doubtful debt is an application of each of the following accounting principle. So in the topic of the provision for doubtful debt, we just do some revision. Provision for doubtful debt. There are three concepts normally in the question we ask: prudence, matching, and also the consistency. So these three items that normally that they will ask. Okay. Now, number one, matching. Well, what is a matching concept? Matching concept is talking about the cost incurred or the expenses incurred match against the revenue earned for the same period. So there is general rule for the matching concept. So how are we going to applying provision matching concept can be applied? So you can say by maintaining a provision for doubtful debt, the creation of provision for doubtful debt will increase the expenses and reduce the sales or revenue, or the sales or revenue earned for the same period. Okay, so this is the answer that we can give because it's only 2 marks, don't need to write too long story. Okay, prudence. Okay, general idea for the prudence is talking about that the business should not overstate the profit and asset. So this asset is referred to the trade receivable because trade receivable is under current asset. So how are we going to put into a sentence? You can say by maintaining the provision for doubtful debt, the amount will charge expenses and reduce the profit for the year. At the same time, this amount will reduce trade receivable and current asset. So therefore, profit and asset will not be overstated. So this is what we can put in for this answer. The key word is basically profit and the asset not to overstate, but it just changed a little bit according to the question set. So that is for the question number 3.